Eric Muathe with Muathe.com. It is about 1 minute before the open, and today I'm seeing one of the stocks in my watch list is down substantially, and this is the monthly chart. As of yesterday, it looks to open lower, and I mean, when I say lower, down by about 80%. Now, of course, it has to be a biotech stock to be doing this type of a distraction overnight. So I want to take a look at the charts here, and I'll be frank with you. In terms of the minimum requirement, even before the drop, it did meet the minimum requirement of a quality breakout, and that is why I was tracking it. If you can see here, we can see that it has recently, as of yesterday, on the monthly chart, and this is all data monthly, was breaking out above the prior monthly closing high, and that level was at 18.85. So that was a legitimate entry level, because we can see that the RSI was just about to move to all-time highs, just about. We can see that the MACDs were already trading at 3-year highs. So there was legitimate reason to suspect that this was poised to move higher. So we have to remember, even our best homework is going to run into problems in the stock market. Now, the market did just open, and after the open here, you can see that the stock is called down 82%. That's a huge drop. And like I'm saying here, the bottom line is it did meet the minimum requirements, and so I can't say that the reason why it's failing is because this and that. The monthly chart met the minimum requirement. So what I'm trying to be honest here and tell you guys, remind you guys, is that there is always inherent risk in the market, especially when you are trading biotech stocks. They have a lot of overnight risk based on news-driven events and things like that. But here we can see that now, if I update this chart, we see that now it is definitely giving us a different type of a look. And it is just what it is, because we see now the market was actually faking investors, because now we have confirmation of resistance on the RSI line. Now we have the MACD showing uniform activity above 0 and back below it. So we can see now that some things have developed. We can see this big down month, and today being August 30th, there's one more trading day for the month. But for now, because of this big down move, we are showing that RSI is moving below 50. When you move below 50 or above 50, you tend to have a huge reaction. As an example of this, we can see a big candle here as it moved below 50, a good size candle up as it moved above 50, and now we are seeing a good size candle down as it moves below 50. Now, just as of yesterday, we can see that the RSI was about to break out to all-time highs. And interestingly now, we got the RSI actually moving to all-time lows. So in one swoop, in one day, all this has changed. And so we see that the market, even when we try our best, we're going to run into situations like this, especially in the biotech space. And if we take a look at, let's take a look at the weekly, see what the weekly looks like right now. And the weekly now is showing that it now looks like improvement on a week-to-week basis, but the RSI is definitely showing that it made lower highs, as you can see with this movement now. So negative divergence. We also see from a technical standpoint, one of the reasons why we are getting this substantial drop from a purely technical standpoint is because of two things. A, as of right now this week, we are moving below 50, and we are now moving below RSI 30.9. So those two things are the reason why we are getting this big move. a drop below 50 and another drop below 30.9, you get this type of a reaction or move. Now if you take a look at all data weekly, we can see that now there's a line connecting RSI highs, and this is now being confirmed. Yes, it is almost on hindsight because of this gap down, but the charts are reflecting that that is where it stalled regardless. Also, if we use our uniformity method, now we can see that after this 1-day move, what the stock in essence was doing was coming back to test this break. That was a break off the highs of early 2015. There, we take that information and extend the line like that. And we can see we've been bumping heads here in 2017, and most recently as of this week with this down move, that is also being confirmed. So how this plays out is hard to understand, but the stock seemingly was coming back to test that line and now confirming rejection. Also, as a side note, we can see at the highs of 2015 we had an improvement on a week-to-week basis, but the technicals were making a lower high. So you go back and see that there was technical divergence. In other words, that was negative divergence. Also, we see that the RSI was rejected at the time in early 2015 here. RSI was rejected when trying to move above 69.1 during these weekly highs there. Also, if we draw a line connecting the initial break here, so there's a break right there. That break coincides with movement. The break coincides with this price movement. We haven't been back to those levels. What I'm going to do is extend this line, and it gives us interesting data points. You can see almost a triple top rejection here during these highs, and now we can see again confirmation of the same line coming in play, giving us what is now the recent tops. Now if we take a look at the daily, and we can see here an 83% gap down. Now that's very ugly, but what we see from the RSI is now we see that there was an improvement to day-to-day highs, 52-week highs, but take a look at the technicals. They were making a lower high. And also, let's not forget that we were coming back to test a recent break. There was a trend line break on the RSI here, which brings it and gives us what we call a warning high. And over the last couple of days, the stock's been trying to break out above that level, and as you can see that was being rejected over the last couple of days here before the drop. And again, for the day, we are seeing a substantial 80% drop because it is moving below 50 and also moving below 30.9 on the RSI. We know those are important thresholds for any instrument. So below 50 and below 30.9. Let me take a quick look at the hourly. And what we see here on the hourly is, again, we had what looks like an improvement in prices over the last couple of weeks and months. But take a look at the technicals. The technicals as of the close of yesterday was coming back to test this line, and with a gap down, and all this is a gap down here. Huge 80% gap down. We can see that the line or the tops of the RSI were in play, and recently we've seen resistance on this line, which is while it was making new highs. So 52-week highs, right, have come with declining strength on the hourly. And we can see another drop below 50, huge drop below 30.9 also on the hourly. So yes, breakouts do fail, but the market has tricks Sometimes it's pushing the agenda. Ultimately, on hindsight, we see that there was reason why it was moving to certain levels, coming back to test critical levels as we've seen on the weekly, monthly, and the hourly and the daily. But there's, at the end of the day, there's inherent risk in any instrument, more so in the biotech space because of overnight risk. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. E, I see.